Hey everyone, and welcome. Today, we're diving into the one day of the week that can absolutely make or break your entire performance. Monday. You know the one. It's filled with the most uncertainty, the most traps, and, the most potential for psychological damage. But what if you could flip that script and turn it into your biggest advantage? Well, in this explainer, we're going to break down a framework to do exactly that. Let's get right into it.
It's a question that plagues traders everywhere, right? Especially if you're in volatile markets like gold or crypto. You come in fresh after the weekend, you're ready to go, you've got your plan, and then bam! By Monday afternoon, you're already in the red, your weekly plan is out the window, and you're just scrambling to get back to break even. Does that sound familiar? Well, I promise, it's not just you, and there's a very good reason why this happens.
And this is the heart of the problem right here. A loss on a Monday just feels different. It hits so much harder. It chips away at your confidence, and it can kick off a whole week of revenge trading, breaking your rules, and just pure frustration. So getting Monday right isn't just about the P&L. It's about setting a calm, disciplined, professional tone for the entire trading week ahead.
Okay, so here's our game plan. First, we're going to unpack why Monday is such a unique puzzle. Then we'll look at the forces actually moving the price. After that, I'll introduce you to a specific strategy designed to handle it, walk you through it step by step with some real examples, show you how to sidestep those classic Monday traps, and finally, we'll lock in the right mindset to pull it all off.
All right, first things first, we have to make a fundamental shift in our thinking. We've got to stop looking at Monday as just another day on the chart. It's a totally unique environment with its own rhythm and its own rules of engagement.
Think of it like this. The market's basically just waking up after a 48-hour nap. All the big institutions, the major funds, they're still sipping their coffee, looking over the weekend news, and trying to figure out their positioning for the week. The market's true intention is usually buried under a lot of indecision. So if you jump in expecting those clean, strong trends you might see on a Wednesday, you're really playing a totally different game, and frankly, one with a much lower chance of winning. So what is it that actually causes this unique Monday behavior? Well, it all comes down to what happens, or maybe more importantly, what builds up over the weekend while most markets are shut down. I am sure you have seen this all over your charts. You can see it in these gold examples right here. The market closes at one price on Friday, and then when it opens back up on Monday, boom, it's at a completely different price. That empty space? That's the gap. It's caused by things like geopolitical news or major economic data that drops over the weekend. That gap represents a huge imbalance in supply and demand, and the market's first job on Monday is to figure out if it wants to fill that gap or just keep running. This slide just lays it out perfectly. It shows the two different worlds. On the left, you've got Monday. Think of it like a slow-moving turtle. There's thin liquidity, not as many traders, and that often leads to this choppy, unclear price action, where breakouts just totally fizzle out. But by midweek, it's the rocket ship on the right. All the major players are in the game, liquidity is super high, and trends have real, powerful momentum. And this is exactly why a breakout strategy that works like a charm on a Wednesday can get you absolutely crushed on a Monday. Okay, so we've established that Monday is tricky. It's got low liquidity and it's full of traps. But that doesn't mean we just avoid it altogether. We just need a strategy that's built specifically for these unique conditions. And this is where we learn to frame the opportunity instead of just trying to force a trade.
The core of this strategy is so powerful because it's so simple. Instead of trying to guess where the market is headed, we literally just draw a box around its earliest movements. We find the highest high and a lowest low from the weekend close all the way through the Asian trading session. And this box, this range, this becomes our battlefield for the day.
And this right here, this is a huge philosophical shift for any trader. On Mondays, we are not predictors. We are reactors. We let the market show its cards first. We just sit back and patiently wait for the price to show us if it wants to bust out of our box with real conviction or if it's going to get smacked back down inside of it. Honestly, patience is the whole game here. So how do we actually put this into practice? Let's break down the exact actionable playbook that you can use every single Monday morning on assets like Bitcoin or gold. It's a really clean four-step process. First, you mark the high and the low from Friday's close and any weekend action. Second, you draw a box around the high and low that was made during the quiet Asian session. These levels create your initial range. Third, and this is so important, you wait. You do nothing until the London or New York session opens and brings that big boy volume into the market. And fourth, you watch for a confirmed move. That's either a strong breakout with volume or a very clear rejection at the edge of your range. And to get a better feel for this, let's look at how the day unfolds. Each session has its own personality. The Asian session quietly sets the stage. The London Open? That's the first real test. And for an asset like gold, it is notorious for stop hunts, those fake moves designed to trap all the early, impatient traders. Then, the New York Open is often the moment of truth. That's when the big American volume floods in to either confirm the move London started or reverse it entirely.
Now, this strategy is powerful, not just for the great trades it can put you in, but maybe even more importantly, for all the bad trades it helps you avoid. It's all about learning how to separate the real signal from all that early Monday noise. This is a golden rule. You know that first exciting move you see right as the London session kicks off? It's often a lie. It's a trap designed to trigger your FOMO, your fear of missing out, and lure you into a trade right before the market yanks the rug out and takes your stop. You cannot fall for it.
So, how can you tell the difference? Well, this table is your cheat sheet. Look at this example. On a recent Bitcoin chart, price broke the Asian range high, but look, the volume was actually going down. That is a classic sign of a trap. And sure enough, it reversed almost instantly. Now compare that with this gold chart. The breakout below the range happened on strong, increasing volume. It then came back to retest that level before continuing down. Before you even think about entering a trade, just ask yourself, which one of these columns does this move fit into? The key is waiting for that confirmation.
Look, a great strategy is completely useless if you don't have the right mindset to execute it. On Mondays, your biggest asset isn't your charting skill. It's not your market analysis. It's your psychological discipline.
So here are some hard and fast rules to protect yourself. First, trade smaller on Monday. Seriously, it's not the day to be a hero, it's a day for gathering information. Second, place your stop loss safely outside the range you've marked off. This helps you avoid getting wicked out by a random spike. Third, and I'll say it again, do not chase that first move. And finally, be a sniper, not a machine gunner. Wait for that one single A-plus setup. If it never shows up, you don't trade. Simple as that.
And these rules are just as critical. Your main job on Monday morning is observation, not action. You have to burn this into your brain. It is so much better to miss a potential move than to get caught in a bad one. Let the setups form, let the market come to your levels, and always remember, your first trade of the week sends a powerful message to your own brain about how the rest of the week is going to go. Make it a good one.
I really want you to let this sink in. Sometimes, the absolute most profitable thing you can do on a Monday is nothing at all. Protecting your capital, and just as important, protecting your mental energy, that is a win. If the setup isn't crystal clear, just sit on your hands. The market will still be there on Tuesday and Wednesday and Thursday, and those days often bring much better, higher probability opportunities anyway.
So, I'll leave you with this question to think about. Based on your own trading journal, your own experience, what has Monday truly been for you? A day of amazing opportunities or a minefield of fake moves? By applying this patient, observation-based framework, you can finally start to filter out all that noise and begin to truly master the Monday market.